What's up, guys? We're going to get started in just a couple minutes. We're going to wait for everybody to join in. Okay, what's up, guys? So what we're going to be going over today is we're going to do a little review on support and resistance, because I've been seeing a lot of people post charts and they've been posting like their levels and things like that, and they just have way too many levels. So how we're going to combat that is we are going to just go through basically how we should be drawing support levels, how I draw them. I mean, there's no really wrong way to do it. You shouldn't have too many levels on your chart. You want to have a good space in between. You want to have a good risk to reward when you take these trades and not just be scared at every single point that it comes to. So for example, like let's say we get into a trade. We see this level here. We take calls above it. Then on our chart, we have another level here. Then we're all scared, going to take profits $1 later. And then we're going to go here. And then there's going to be a level here. And like these levels are just too close. It's not, your risk to reward is never going to be there. The trade, just, there would be no reason to trade something when it's this small a price movement, like when price levels are so close together. So what I'm going to try and teach you guys is to spread out your levels, only play at really important levels, and just focus on those levels. Wait for those levels to hit. My entire trading strategy is built around support and resistance levels. And so this is how I draw mine. Just to get right into it, I use a line chart. I make it simple because if I have, if I'm looking at the candle chart, I always try to look for consistency in my trading. So like the way I draw with my levels is always the same. So the only way I'm going to know a strategy works is if I draw my levels the same all the time. I'm going to get different results if I'm drawing my levels in different ways. And that goes for anything in trading. You're going to get different results if you're doing different things every single time. And you can't be consistent if you're not doing the same things over and over and over again. It's like a basketball player. Like someone that's trying to be good at basketball, they're going to practice basketball to be good at basketball the same way every time. They're going to practice. They want to be a better shooter. They're going to have the same form every single time over and over again. They're going to practice the same form so they perfect that form. Same thing with dribbling. So like any sport. So you want to have your system or your playing style, if you're a basketball player, to be the exact same as every time so that you can grow in those strengths and be a master of one skill, not someone that's a master of none, right? So this is how I go about drawing my levels. Usually you start on the higher time frames. The higher the time frame, the more significant the level. So always keep that in mind. So meaning like a level drawn or found on the daily is more significant than the 4 hour, and the 4 hours more significant than the 3 hour, 3 hours more significant than the 2 hour, and so on. So the bigger the time frame, the more important the level is. Okay, but we're just going to go on the daily time frame for the sake of this. Okay, so let's just talk about how I draw my levels. So this works with any stock. This is how I do it with any stock. So some people do touches, like if there's a certain amount of touches. Some people do if it is shown to be a support and a resistance level, meaning it acts as support and has acted as resistance in the past. Or some people do 3 touches. And the way I do it is just focus solely on turning points. So meaning like places in the market or on the chart where price drastically turned. So it's kind of like pivot points, but I'm more so using the line chart to see those levels and choosing the ones that are the biggest moves that will make me want to take or plot that level. So for example, we just go through it, just looking at my chart. This would be a turning point. It's also the lows of the year, but as you can see, we had a very intense bounce off of this level. It was very like price came down to here and completely changed direction. That's what we want to see. So like this is a turning point, right? If you need help with this, if the line chart's meant to make it simpler, and I use it for more accurate levels for myself and to make it more consistent. So the main reason I use this is because of consistency. So the next thing we want to look at is you want to pay attention to, I mean, you can do it on the candlestick chart, but I just do it for consistency reasons for the line chart, just so that I always draw my levels the same way. I'm always looking at the line chart when I draw my levels. And it helps you see more turning points more clearly. So one thing that may help, you can use TradingView. The reason why I would say use TradingView is because it's free for the regular platform. I don't use any indicators, so it doesn't matter about the indicator limit. The only thing that the free version doesn't have that I like to have is the alert system. I like the way they do alerts on here. So, but anyways, this is an indicator that you can use and put on your charts, and this is what it will look like to help you identify pivot points more easily for yourself and just make it so you see them directly, right? But this is in terms of like here is a pivot point because it is that's where the wick went. Like this was the absolute low. So as you can see, this is not exactly pivot points how I draw pivot points, but it's the same concept. Like I draw levels based on these major turning points, but I do it on the line chart. I don't use that. So now we're going to continue in how I draw the pivot points, right? So like, for example, here's another level that I would draw because look at this, how price came to here, completely changed direction and went the opposite way. Let's look for another one here, not as aggressive, but it's still valid. We had a move down and a bounce right back up. Okay, so here's another key level. We had a strong move up, double bottom, strong move up. And then look at right where we rejected and had a huge move down. So like, if you really look at this, the most important level kind of on this S&P 500 chart or the SPX is this level, this 4174 level. So if you're building a trading plan, this would be easy to say, okay, if we break above this, we take calls. If it rejects, we take puts. As you can see, the drastic moves that we had from here. So this was from that level there all the way down to almost a 500 point move. So I think my math is right. Yeah, around there. So these are major areas where price turns. Okay, so how are we going to review this, right? So I taught you guys how I draw my levels. It's as simple as that. Major turning points on the chart. That's all I'm looking for. So people are going to ask, like, is, one second. They would say to me, like, is this a level? We had to pull back. We had to move down, it reject off it. It turned, price turned, right? But it wasn't that aggressive. So with saying that, I would say, sure, you could use this level, but I wouldn't personally, I would probably skip over it. I would have it on my chart, but I probably wouldn't trade it. Just because it's not one of these major levels where we have a very significant move off the level. I'm looking for very significant moves because I want the high percentage gains, right? So what we're looking for is bigger turning points. Like, yes, this could be a turning point, sure, but I mean, it's not that major. As you can see on the chart, it's not that major of a turning point. So now, how can we go and back test this? How can we see if these really work, right? Oh, I see what's happening. So we're in replay mode already. I didn't realize that, but okay. So does everybody understand how I'm drawing these levels? There are major turning points on the chart, and like that's literally all I'm doing. I'm plotting the major turning points on the chart where price completely changes direction and has a strong move in one direction. Okay, yes. Thank you for letting me know. Okay. So I mainly like to do it off the daily chart just because those are strong levels. The weekly looks a little bland, I guess. Like there's not very many, but this could tighten up your trading even more because these levels are even more important because they're on the higher time frame, like right here. Okay. So now what we're going to do is we're going to backtrack a little bit. And we're going to go over. So I did realize that I completely forgot to press record on that last video for you guys last week on how to replay trading strategy or how to back test your strategies. So I'm just going to do it right now and put it into practical use right now. So this is the replay mode. This isn't real time, but this is how you can back test strategies, create a plan, and then back test it, see if it works. So let's go through and draw some levels right now. So right now we are trading at this right here. We'll switch it to the candlestick chart in a little bit. But let's go through and draw. There's a major turning point, right? Major turning point. Okay. And we can draw this one as well. It's not as good of a level. Okay, let's just stick with the best levels, right? Stay disciplined. So let's go here. Let's take a look at the hourly. Okay, as you can see, we're trading in between this range. So we're going to press play and watch this play out. See how cleanly it rejected off it the next time it visited that level. Clean rejection, clean rejection. And trading in these key levels will help you avoid chop. Notice how the chop is happening in between these levels, right? So it's a pretty easy pick one side and play it, right? So it's still playing out. And when we had the break, notice when we broke this key level, notice we were chopping this entire time. And as soon as we broke this level right here, we took a huge downturn, right? So that's how we'll do it. Okay, so we continue, we go back, right? And so now we had this move. We're at this low. That's a key turning point. We had a strong move up. Now let's see if we can get some other levels. There. Here. And there. Okay, so let's have some tentative levels drawn there. We can readjust if we need to. Okay, so notice how we bounced right at that. Go to daily. Notice how where we're bouncing is right at that turning point. And it's, if you go look at, so this is a good example of the difference between the two. Notice how the pivot point was down here, down at this level right here. But where we actually turned around on the chart was based off of that level on the line chart. It won't always be like that, but it's a good thing to know, right? Okay, as soon as we broke that level, had a major downturn. Notice where we stopped, broke below again, retest, move down. So that's just an example of how we play these levels, right? So now we can take a little deeper look into this. Now we're watching. I think this is when news started coming out. So we broke below this level here. And notice how it tends to react to these different levels here. And price is never going to look perfect, so always keep that in mind. So we just got to make sure to see how it reacts. Strong move there. Okay, let's go back to the charts. And notice how I'm having to go back further in time. So usually I will go and use levels from the most recent price action, but that is the most recent price action, you know? Right now it's caught and chop. So this is when you need to know when not to trade. Right. And this was a week when we had CPI and all that stuff coming out and the Fed meeting, blah, blah, blah. And this was chop leading into it. So let's skip ahead. Okay. So now let's take a look at price action. Even so when you look at this, we broke above this level, we retested it for an entry here around 3,900. It ended up topping out. This is about a $5 move on SPY. That's an easy 100% play for sure. So the price may look smaller, the action right here, but this is actually a significant move in options contracts. 50-point move is a very big move. Okay, now notice we broke support, continued to break down. Couldn't break below that level. See how we had two significant wicks right there. Now we're holding still. Boom, we're having to move up. Gap down. But even so, take recognition here of when we were breaking down, we were holding. We had a fake below, which is called a liquidity grab. Basically, when market makers push price below a level to stop people out that are in calls and get people to buy into puts when it breaks below here. Okay, so that's why I typically wait on the retest, but this is an example of liquidity grab. Close below, stopping people out, getting people into puts. They're buying puts, they get stopped out. We break above, we hold it and retest, and then we have a move from 377.8 to, that's another $5 move right there. It looks small because this is an hourly chart, but that's an easy big play. Okay. Another example of gap down below, fake out, break back above, retest, move up. And this time might be a little better move. Yep. So we got a nice move from retest area 3782 to, so you got to think in terms when this is SPY. Say if you were trading SPY, this is basically 10 times the amount. So like think of this as dollars, just move the decimal over. This is just 10 times the size pretty much. So this is about $378 to $348. That makes sense. I'm gonna move up. And this shows you good examples of when you should avoid, because why you should avoid taking calls above or just closes above and stuff like that, because you can have fake outs like this, fake outs like this, fake out like that, fake out like that. When you have those moves below a level, they close below, but then they don't hold. So it's usually better to wait for the retest. Still choppy. Holding this level. We broke below. Still in a lot of chop. And then see when we finally decide to reject that level, we have a nice right to support, and that's exactly where we bounce. Is all of this making sense? You guys understanding how this works? Yeah, no. Okay, well, this is all that I have really to show you guys. I just wanted to do a review on support and resistance and make sure you have some consistency on how you're drawing your levels. If you're not consistent in the way you draw your levels, then it won't be effective in the long run. So thank you guys for joining, and I'll see you guys for the markets tomorrow. I'm excited for a regular week next week.